Hiya friends, Bitcoin prices have been dropping and then rising and dropping again. So we'll be taking a look at the Bitcoin price in today's live show. We'll also be looking at some altcoins, and maybe if anybody wants to suggest anything, we'll take a look at that as well. Going to keep it all nice and straightforward for everybody as well today. So without further ado, I'll just roll those intro clips and we'll the rest of them in just a second. So just before we dive on into things, thought I'd check in with my pal Kirk. How you doing, Kirk? How you doing, KDoc, as well in the chat, and to anybody else that's joining us, welcome to the show. What did you think of the thumbnail for today's show as well? It's the Star Trek Enterprise being shot at. If you didn't catch that one. Anyway, back in the charts over here. Now, I was thinking, how will I do today's show? And I was looking at my previous episode. Oops, stop rolling them. Have I rolled the credits by accident there? Whoopsie doopsie. I thought, how would I do this? How can I stop that? Just. Like, how could I do my previous show? Maybe I'll just play sections. Wow, it's still going. Can you stop, please? Stop it. Where are the credits? Hide credits. There we go. Hide them. I was thinking I could show the clips from the previous episode because we really did nail it in the previous episode's analysis. And I opened up the YouTube thing in my Chrome browser. Works for audio, but my Brave browser doesn't, and I've got this one over here in the chat, and I just thought, well, I'll just have to not talk about it, talk about my previous episode, or not play my previous episode. I was going to have a laugh and say, here we are live doing the TA together, and play myself, and just let myself from the previous show talk us through everything that's just happened, because that's kind of what it's like. So let's just do that together ourselves then. And what were we talking about? Well, in the last show we talked about the two different Fibonacci's. We talked about the clear areas that we want to see the prices stay above to stay bullish, and areas where you'd be looking at for things to go negative. We've talked about the targets towards the downside plenty of times, but we also did mention in the show like the target towards the 618 over here. So that's all happened, and how did we know that that could possibly happen? Well, it was on the break of that 52,500 area we spoke about so clearly, and there was some other things that went along with it. This is the 4-hour time frame, jumping up towards the 24-hour time frame to. First, I'll show you that currently, in terms of the DMI, we've not crossed here in that negative way that for the bullish case scenario to play out, you don't want to see happen. So that's not happened yet. It's got those Rick and Morty lips, as I like to call them, on there on the go. But over here in the 4-hour time frame, you can see quite clearly that following the show, and if you then watch that or watch the or we're just looking at this yourself coincidentally, that's all good. Following on from the show, when we had this bearish divergence between these two highs that we were talking about, there was this negative cross here on the DMI, and that happened with the ADX in a position of strength, and it happened as the prices broke down past, actually crossed over in this wick here, but it crossed negatively, giving you that negative signal and give you a great rebuy entry up there for anybody wanting to trade it towards the downside and take a short. Now, I don't talk about shorts too often on the show these days. I used to talk about it like at least sort of 50% of the time. Because the general audience isn't really that interested in talking about shorts, to be perfectly frank, and that's totally fine as well. Instead, we're talking about areas down here as being decent enough ones to see entries on for longs if you were to look for a bounce up the way, essentially. And what then would you want to see happen for that to be positive? And there's a couple of things that we can look to. Such as how we've fared since we've come back up above the 236. Oh, okay, fine. This was of the way this was positioned on Friday was up like this, by the way, for anybody that was interested. You know, it was all talking about going between the 618 here and the 236 over there. And you're invited to go and watch Friday's episode if you didn't, just to sort of see all the detail in terms of how we came to the chat. And at the end of it, you'll see in my summary, I was saying, well, you know, if the trend's going to be your friend, then this is what we need to see happen. If not, then we're happy enough to do this, and then and this is where we can see the prices going based on this divergence down below. But of course, the trend's your friend. Well, let's just keep with that, because as I'm saying here on the 24-hour time frame and above, the trend is still your friend. You know, in the face of this bearish divergence, which is playing out currently, and from a point of view of the shape of things, how Ed Sheeran would look at this and say that he's in love with the shape of that or whatever. This hasn't actually fully sort of seen the market capitulate here with regards to these movements down the way in terms of the broader structure, and that we haven't actually closed down there. Now in the 12-hour time frame you can see we came close, and on the 4-hour time frame you can see that looking over to the left, you know, we did come down here and close a couple of candles down, but we didn't break any of that, as you can see quite clearly. On the 3-day time frame then, looking up, you can see that while we have indeed got that divergence on the go, that we're a ways away still from really having had the negative stuff kind of kick in, and we've just had this positive cross recently on the no sure thing indicator, which is happened after a drop down from a high, which was, you know, obviously bearsely divergent and whatnot. And then here on this time frame, you can see that this is, as we spoke about as well, you know, just class B divergence there on that one, but still okay. That's 2-day time frame, wasn't it? 3-day time frame's a bit more clear on that divergence. And again, then up towards the weekly time frame, how everything's really kind of rosy and lovely, so long as prices stay above sort of key areas, and that we're a ways away from any inflection, you know, really in the market, any sort of previous support and resistance zones. As you can see here with this previous few candles just all of having been positive. So what we look at on the 24-hour time frame in terms of these resistances is shown quite clearly here with the Donchian channels for us, giving us the clear area to look to that we obviously don't want to see broken, and that's the 42k price point. And actually now at this stage we're once again looking to see whether or not we'll be able to put in higher highs and higher lows to continue the overall upward trend, or if we'll see greater fulfillment towards this of this divergence that we could be looking at. Following on from that hidden bullish divergence that we had here, which brought us up to these prices in the first place, it would be nice to be in a position where you're seeing hidden bullish divergence yet again, but we're not getting that with what's happened so far. And we're still waiting for the prices to retrace back up past particular areas for us to really get, you know, excited about things and everything. At the meantime, so that's that, and that's cool. Yeah, it was a little bit early tonight, by the way, for Micah. Good to see you there. Good to see you, Alex. Good to see you, K-Doc. It's nice to see you saying hi to each other and all that good stuff in there as well, Maderios. So shall we try and make a little video that I can extract then to publish out there and put it out there into the world? So in terms of these moves, by the way, from the Discord and everything that we talked about, it's kind of come down. It's maybe worth pointing out that, you know, it's kind of come down to this area, which does give you a decent enough buy point. But then, like I said on Monday's video, that the price action then going beyond this point over here at 42k, and like I just said again a few minutes ago, it would be obviously very, very negative for the price for the price of Bitcoin. So that's, you know, an area for you to choose how you'd want to manage your risk, like what's appropriate for yourself, and how you want to get in a position there. If it were to go down to those areas, you know, you could be taking that bullish scenario sort of point of view where you're looking at it from this broad point of view time frame and saying, well, hey, you know, we're actually just putting in a higher low overall, everything's okay, it's just, you know, it's just a natural retrace, etc. And so on and so forth, right? But right now as well, you know, you've got, like I said earlier on as well, you know, always suppose, I think if doing YouTube videos over the last year's taught me anything, nice to see you have anything, it is that you want to always present the sort of all of the entirely bullish case scenario stuff, right? It's what you want to do. So So here, for the benefit of people who are dedicated enough to the discipline of trading, etc. What are we looking at again? You know, from a point of view of what happens at those areas, right? What happens at them? Because I'll not be talking about this in the show, but why is that particularly important? And if you just kind of draw your attention to this area of price action here at the end of November, what was this? Well, this was actually when we came in for all-time highs again in here, and that was the big old retrace as well that followed on from that, and it's actually really quite significant in terms of percentages and everything down there, 16% down the way. You know, nice big retrace on up then since then, after that point putting in higher highs, etc, etc. Now we could look at this a couple of different ways, and it probably would be wise to also consider where we've come from in terms of the what's all this old stuff doing here, in terms of the full move up from the March lows. Maybe I should do that, in fact, instead of all this, just so you can see and know what we're talking about. So in terms of if we're actually looking at a bearish trend happening, right? Because this is what you want to always know in advance. If we're looking at that potential, then what are we looking for? And the easiest routes to that are going to be these two here. So breaking down past 31,000, very bad in terms of the overall bull market, right? That's the very bad point, right? And breaking down past where's this one come? That was that one. That is the yellow. Is that the yellow? No, the yellow Fibonacci's. All right, okay, cool. Yeah, the yellow Fibonacci's from this low. Sorry, confused there for a second. Breaking down past 43,000. 43,000 is very bad in terms of, you know, where we've come from since the all-time high point of view. So there's two sort of distinct psychologies there with regards to that. You know, there's a lot of people out there, and you'll know from watching YouTube yourself and that we're kind of really kind of hesitant to accept that we were in a bull market until such times as we've broken past 12,000, etc. And fair enough, right? Because of the fact that we were in a downtrend really until that point. In many regards, from really broad time frame structures, but we were also looking at that stage as having had been in a bull market already at that point for more than 6 months, for 7 months. By that point, I've already been in a bull market when we were getting to the all-time highs, etc. Or 6 months by the time we'd been at the sort of 12 grand levels. And while obviously we knew that there was the potential for prices to turn around and stuff, it didn't happen. So now you've got that sort of psychology of when you were looking at it that way, and that's sort of saying that breaking down past 30,000 at this point becomes a severe problem. And how would then that work? Well, that then means that unless you go on in your subsequent high afterwards to really put in higher highs, then there's some serious problems, a la 2017, 2018 at that point, right? And then of course with regards to the other one, the sort of just from the all-time highs, the same sort of deal. Okay, it's obviously you're just talking about a different sort of structure and mentality at the time, but breaking down past those points, you know, it leads to further movements in the price action potentially. So you'll see over here that the 236 lines up with the 50% of the yellow one. So if we go past the 236 at 43,000, then the chances of us coming down and testing this one at 31,000 are extremely high at that point, okay? And then that's us testing the 50% line. So then the movement between the 50% and the 618, taking you down to that CME gap fill territory in or around about that mid-20s, is absolutely possible for a sort of golden pocket refill over here. And that would be your longer term stuff, right? That's how you would know that. That's all good. It's good to get that out of the way for everybody who's you know, taking the time to tune in live, so because you want to know how to be the one that looks ultra cool, right, in front of everybody, because now you can say to people at certain price points like what you're feeling like, and they'll all look back in time and say, yeah, that guy knew. That could be all of you. Of course, if that doesn't happen, great, because the trend's your friend, right? So that brings us neatly around to talking about the if that doesn't happen scenario. So if I just drop a marker on here, then I can say to everybody, Bitcoin prices still have a lot of upside potential. We could be looking at the prices actually moving up from here towards targets as high as 87,000. Now, that's actually a 100% increase in the price of Bitcoin. Is that possible? Are you out of your mind? Well, there's a couple of things that we will need to make sure that we've covered in this little Bitcoin price prediction episode, so that doesn't sound like complete lunacy, and that'll constitute our risk management section towards the end. But let's dive on into things and see what we want to see happen for the prices to go up to those heady highs, 100% up from where we are. So hi and welcome back to the charts. That's quite zoomed out on the 24-hour time frame. Want to zoom on in here and make a couple of quick points. You know, this high that we saw on the 7th of January followed up by the next high on the 21st of February. Overall, it didn't have any bearish divergence here on the MACD between the initial impulses up that we're looking at these 2 points. Very good, right, between those 2 points just there. So let's just kind of draw in like these 2 rough points over here and these 2 rough points over here, looking like we're doing okay so far, ladies and gents. And then as well, we have actually got a Fibonacci retracement here on the smaller term the smaller term movement down the way since the highs down to the lows, and we can see that we're clearly above the 236 over here. And so long as we maintain those prices above 47,000, then we've not really broken that structure too negatively at the minute, and we could be looking up towards higher highs. I mean, the first profit taking target could come in at 53,000 from where we are just now, for example. But I'm not a financial advisor. None of this is financial advice. And besides, what you're here to find out is how could we possibly go as high as the 81,000 area. And if we actually look at the Fibonacci extensions going on beyond the 100% retrace, i.e. if we take out our previous all-time highs, now that we've managed to get past the 47,000 area in terms of our retrace so far, lovely jubbly, then this would come in as a nice overall local low that is pushing us up here for the chances of coming in at the 80,000 area, and it may be even pushing on beyond the 2.24 Fibonacci retracement point in there, 81,000. And of course there's a plethora of higher up targets than that right from here, from where we are. But you could look as well if you're looking in between at 69,000, great number, also where the 1618 happens to be living at the minute. Isn't that good to see? Well, that is good to see. I'll tell you what though, if we do see the prices dropping down below 43,000 from where we are right now, it's not a happy scenario. Okay, so managing your risk in and around about this blue line, this green line, these 2 zones in here is probably fairly wise, you know, especially if we were to be taking out that 44,000 area. Then you are looking down at somewhere between 41 to 42 in terms of where you maybe would be managing your risk. Now that could also offer up your best entry for that 80k target and give you that 100% move. Wouldn't that be lovely? But then if we're looking down that, then there's a distinct chance of us coming in here and touching off this red line. We have to be honest. In fact, there's also a really distinct chance of us coming down as far as the 50% Fibonacci retracement point from this one, which is the yellow one here, going up towards those highs, coming in from the lows, the departure point here at the previous at the low, following on from the all-time high break up to where we were here, you know, over the last few months since the late November. And then as well, that ties in nicely with a retrace off of the overall bull trend, which is this 236 point in here at 30,000. It just flashed on the screen for a second, flashed away. Excellent stuff. So that's your long-term technical analysis and your short-term technical analysis. Of course, it's maybe not short-term enough. How are we going to get there from where we are right now? Dropping down towards the 4-hour time frame. And now seeing that we've come in here, put in this low, which is higher than this low over here, giving us really strong hidden bullish divergence. Disclaimer, you know, going down past this point here, we'll see that, you know, probably not be the case. Taking out that previous low then just means convergence. But as it stands, that's what you're looking at, and that could be very good. Now there are problems for us. You know, we did have this bearish divergence on the RSI at the top, and that has maybe played out at this stage. You know, very good. And if we can see the prices then continue to push up past all these key areas, especially taking out the 53,000 area, then that's when we get our jetpacks ready for looking at, can we take out the all-time high? And if we can, then of course the sky is the limit. At that stage, people will be looking at the back at this and saying, wow, that was a full 23% discount on your prices of Bitcoin. You're a fool not to get in. Let's just look at it for now and say, well, hey, this market structure is like this going down the way, coming up so far, you know, and it puts us in a nice position to say we need to look at our previous areas structurally to come up with our targets. Okay, that's going to do for today. But there is the negative stuff, like I said, is lurking down below. Got this nice negative cross here for anybody taking short positions off the top there. That was a beautiful signal here in the 4-hour time frame. Look out for stuff like that. If you want to know more about how to use the DMI to improve your trading performance, then make sure you join the Discord. Talk to me in there. There is a great free section as well currently, for which will become premium down the line. Going to help educate you to become self-reliant trader. So whether you're trading Bitcoin like we look at here right now or anything else, you'll probably benefit from being part of this wonderful community. Drop me a like and a subscribe here as well if you've liked the content. And then of course, look, be aware of this. Beware of the judder man, my dear, when the moon is fat. And the moon is certainly most fat at the minute with regards to the DMI over here, putting in Ricky Morty lips. There we have him, Rick and Morty lips for us. Be interesting to see how that works out. Okay, so that Bitcoin episode went on for way longer than I wanted it to, put in way more detail than I wanted to, but there you go. I mean, people can't say I didn't tell them exactly everything, right? Told them exactly everything. I feel like maybe too much. So thanks so much for hitting like, by the way. K-Doc, nice to see you here. TradeSpot, nice to see you, Marcin. Good to have you again, my friend here. Nice to see you, Crypto Rocket. Just charging up for another launch, though. That's lovely positivity from you there, buddy. Nice to see. Nice joke for Micah. Have you been grounded this week? Hopefully with a nice safe landing if you did. I'm TJ Kirk and Spock Van Zavi guy. Yeah. Not quite following along there, but it's got something to do with my old Star Trek. In fact, let's start off this one with Star Trek. I'll hit another stream marker thing and I'll try and actually make the clips here. I've not actually looked at the Ethereum prices today, so this is going to be one of those times. By the way, actually as well, you know, we talk about these things, and like I said about the whole bullish case scenario stuff, the chat that was in the Discord in the premium part for the Bitcoin people was talking about the case to break the wedge towards the top side. I just want to make, just since give me a second here to be clear about all this jazz. There are various wedges which we broke out of recently and then retested, etc. And there's this case that I was making for the break towards the top side. We've also had the channel which is now broken towards the downside, etc. But you could also have been looking at this, you know, in various different ways, blah blah blah, and how there's other things like that you could be looking at. And that'll come into consideration when we're looking at these next coins here as well. Just, you know, for everybody, this is the I guess the difference between watching the live show and watching the static clips is that you get to know you get to really know what's going on, right? And in fact, you can see as well, I've already done the work. Thank you, past self, and towards future self. You're welcome, Friday me. For doing the work right now, right? This is technical analysis. This is always good to have to hand to know, and it's obvious to say that I've already kind of spoken about certain ideas here that could be happening for us, and that'll do us for a headline in terms of what we're looking at with Ethereum Bobs. What's the price right now? 1500 area or so. We're at 1600 right now. Okay, so cool. So we've gone all the way back from the First World War and all that chat to 1642 and Christopher Columbus sailed the ocean blue. Was it 1642? Was it something else? I don't know. Should have done it sooner. Strikes me as they should have done it sooner. Where's your internet, bruh? Where's your satellites? Ethereum prices have dropped all the way back down to 1600. In fact, they went as low as 1500. There is a wedge pattern on the charts that we'll be taking a look at and seeing, are we going for a measured move? Could take us a good deal lower than where we've come from already. And also, is there any chance that the prices turn around from here and going towards the top side? Which I'm happy to tell you that there actually is a chance of that. And if we were to go up towards the top side, our target of $2,760 still remains possible for us. Let's take a look at the charts together. Oh, thanks for joining me, by the way, Kirk. Thanks for joining me. What's the other guy called? I mean, I'm thinking Kobayashi, but is it Kobayashi or is that the man from Uncle? And here we have the charts, ladies and gentlemen. The Ethereum US dollar chart, ETH USD. We're looking at this wedge here and asking a couple of questions. You know, have we gone past this critical point yet? Well, we have, but have we closed past it and broken it? Not quite. And that's 1550 area or so, where we've got this red serrated line. Now, if you watched the episode from last week or on Monday or any of the recent episodes, you'll know all about this already. Check out a live video. Would really love to see you take part in a live video. And if you want to actually improve your trading, then make sure you join the Discord, drop a like and a subscribe, and come back for all this as well. Great stuff for discussing things in the Discord if you ever want to, with friendly folk. And we saw that there's this potential for a wedge. Okay, we've moved outside of it. We have more or less taken off the full measured move with this. This is the logarithmic chart, which explains, if you're wondering, why that measuring stick changes size as I move it across the screen. There's it on linear, showing you not changing size. But anyway, and we've done that. So that's, you know, score one in the bullish case scenario. Okay, just asking you to kind of ignore these arrows currently that are on the charts. No need to get carried away with looking at them. Just keep your eyes on the prize for now, ladies and gents. I'll help with that. And we're above this red line over here, which is actually, you know, saying that we're above the 382, having broken past the 236. Sure, when the prices moved down from 1780 and came outside of the wedge, we did, you know, move past that zone, but we're back into what would have been kind of fake out territory, staying above the 382 and not going for that full Fibonacci retracement. Now, we did actually come in and touch the 50% here as well, and that's interesting to see. But this is awfully eerily familiar with chat, is it not, from what we talked about with regards to Bitcoin on Monday. Might be worth then bearing in mind that we did indeed actually come down and get a 618 golden pocket retrace. Well, maybe not quite to the dollar, so let's just say the same thing. I mean, this is coming at 12.93. We could see the prices going down to that 1300, 1350 area. Okay, that could happen here if we see continuation down past these points. Areas of managing risk, easy come in at 1550. Now, what about that upside you were talking about, Rocky? Well, actually is an old bit of the old chit chat. I often talk about not really being a massive fan of the 2.24 Fibonacci, so should maybe add in the where's my other twos here? There's a 2618, for instance, for us, showing us that the prices came in here and actually came up as high as that red serrated line in there at that 2618. But this Fibonacci retracement then is maybe not the one that we want to be looking to for the next big move. This is our most significant retrace that we've had in this entire movement up so far since, you know, the wedge started. It has fulfilled a measured move off the wedge. So if we want to look at this from that point of view, where could we take us up to? 2460 is the 1618. If we're looking up towards the 4414, that's 4344, and that would be your next target up the way. Interesting stuff. Well, if we can make it past stay up past the 236, and bear in mind that's actually lining up perfectly with this red straight line we've already talked about, you know, a handful of times at 1550, then we're looking good for that, and we could, you know, take profits reasonably off people who've people who've managed to buy this dip, if you will, up towards that 618 area, and they're $1,807. Okie doke. That's where you could be looking at for taking profit. If I'm not a financial advisor, none of this financial advice, but if you're looking for those big, next big move targets, then 2,460, let's just call it 2,400, would be a good enough target. In fact, for this top side target, it's 4,344. Let's call that 4,200 just for the lols as well on that one. And I'll see you in the next episode. Hit a like button there. That's really good when you do that. Hit the subscribe button. That's also really dandy. And if you join the Discord, then that'll be cool. I'll see you in there and we'll chat about all sorts of stuff. That'll be fantastic. See you later. So I didn't really need to say goodbye there. I need to remember to tell myself that when I'm doing my next one. I'm doing my next one now, ladies and gents. Ladies and gents. Hiya, Crypto Rocket. Good to see you, by the way. I think I did. Yeah, let's see who else is chatting here. S. Hello, S. Nice to see you, S. I'm a short god, worship me. Oh, cool, nice one. It's good to have you here, short god. I don't have any sort of gifts for the gods right now. Wait a minute. Oh, my camera died. Oh, look at that. Kirk is left perplexed at this point. Well, that's cool. I can just do this voice only style. Okay, so well, this will be interesting to see, won't it? How the videos perform. Let's see how the videos perform when I'm not on camera. So let me just go over to one of these other ones where I have. Well, that explains people tuning out, doesn't it? So I made it. I was reading through the chat there, and I made it to the point where you said you couldn't hear me. Thanks so much for that. Well, anyway, cool. We killed off the week, right? This is Cobra Kai trading. Trade first. Trade hard. No mercy. Anybody else get buy gold ad on YouTube? Peter Schiff really going all out. Yeah, Dom, no sound. That's right. Sorry about that. In the Matrix. Wow, man, I can I have an 8? Yeah. Hey, Rocky, we can't hear you. Yeah, that's right. Sorry. Thanks for that, Marcin. He knows too much. They got him. Right. Well, what we're going to do here is technical analysis on Chainlink, right? We're not going to do it on the 1 minute time frame, although we could for a laugh.